Hello friends, welcome to Market Analyzers. Today Nifty fell by 159 points and closed at 19,742, whereas Bank Nifty fell by 760 points, closed at 44,623. Yesterday we spoke about US Fed meeting which will impact global equity markets. Yesterday after this meeting outcome, US markets fell by 1%. Now let's talk about the event in detail. Even in yesterday's news video, I told market expectations are no interest rate hike in this meet. US Fed also did not raise interest rates. The next point is US Fed will maintain those interest rates for longer time is what we discussed. The points which surprised the markets are in this meet. They did not raise interest rates, but they told there might be another rate hike this year. This is first negative surprise for markets. Markets was expecting 50-50 chances of rate hike in next meet, and there will be no rate hikes after that. Now the Fed is saying that there will be most probably one more hike and the interest rates may peak at 5.75%, which is 5.5 now, which means 25 basis point hike is a possibility. All the points which we will discuss. First let us know what market was expecting, and then let us understand US Fed statements which will give us good understanding of expectations versus reality. Second negative point, market expectations was in 2024 there will be 4 rate cuts, which means US Central Bank will at least reduce interest rates by 4 times in 2024. But now the Fed members are expecting just 2 rate cuts in 2024. These are two main points which were significant negative surprise for markets. In addition to these, there are few minor points which are inflation coming to 2%, which is US Federal Reserve target, which earlier was estimated will happen by 2025, is now revised upwards to 2026. And statements like strong labor markets, which means jobs getting added in economy is strong, which will also keep inflation higher. And bond yields rally. US 2-year bond yield is in highest level since 2006, when US Fed told they will raise interest rates one more time this year. Bond yields suddenly rose higher in US and went to 17 years high. Always remember, rising bond yields are negative for equity markets. Now let us come to our Indian markets. The main reason for our markets fall is FI selling. They were selling in earlier months also when markets were moving higher, but from past few days their selling is intense. Yesterday itself they sold 3,100 crore. Dollar index might play a key role in short term is what I personally think. Until dollar index stabilizes, it is negative for emerging markets. I will explain clearly why dollar index rising is negative for emerging markets, because if dollar index rising means it indicates dollar is getting stronger with respect to other currencies. Let us take India as example. If dollar is getting stronger means Indian currency will get weak. It is now at 83 mark, which will increase to let's say 90 mark. If an FIA from America wants to invest means, if he invest when USD rupee at 83 means, if rupee getting weaker and move till 90 means it is a loss for him, because if you want to convert this Indian currency to dollar, earlier he used to get $1 just for 83 rupees, but now he has to pay 90 rupees to get $1. So dollar index should get stable at some level. Investors won't worry whether dollar index is at 110 or 100, but it should get stable at some level. It should not keep on fluctuating. So let's see when dollar index stabilizes. This is a short-term negative event for our markets. And these Canada updates are also coming up, that they have suspended issuing visas from September 1st, but it did not come from Canada government agencies. A private agency, BLS, they do process visas. They have updated the reason as operational issue. Let's see what India will do to counter this move. Due to update from BLS, the share price moved 3% lower, but company has updated visas from Canada just contribute 2% of revenue, which is not a big impact on company business. Let's talk about Nifty price action. 19,820 was major support, which broke on decisively today with strong volumes. But next major and important support is 19,600, because 19,600 has many supports and resistances previously, plus there is pivot point support is present in daily time frame, and Fibonacci 61.8% golden retracement level is also present there. So 19,600 with respect to price action and indicators, it is an important level. So I am personally still considering Nifty as bullish until 19,600 level holds. Below 19,600 I am negative on Nifty. Now let's talk about option chain range 19,500 to 20,200. Just few days before markets were moving closer to 20,200, but now they are closer to 19,500. But there are very good supports at 19,600 level. We can confidently carry 19,500 to 20,200 level as our Nifty range. Friends, if you like the data I have shared with you till now, please consider subscribing to our channel. We will daily discuss important market updates, and like the video. If you know any of your friends, please share the video with them. For any feedbacks, please do comment. Now let's move on to stocks news. First, Tata Power. Tata Power ties up with Durga Power, which is a prominent player in renewable energy sector in Nepal. This deal will help both Tata Power and Nepal to accelerate their shift towards sustainable energy. Now let's move on to CIPLA. US subsidiary of CIPLA, which is InvaGen Pharmaceuticals, has received 5 observations from US FDA. The inspection took place from 11th to 19th September. Updated CIPLA in exchange filing. Now let's talk about HDFC AMC. RBI has granted approval to HDFC Asset management company to acquire up to 9.5% stake in Karur Vysya Bank and DCB Bank. Anyone wants to buy big stake in banks means they have to get approval from Reserve Bank of India. HDFC AMC should acquire 9.5% stake in both the banks within 1 year. If they fail to do so, then the approval will be automatically rejected by RBI. With this news, the share price of Karur Vysya Bank and DCB Bank was higher today. Now let's talk about Fino Payments Bank. It is a commercial bank. They have filed an update to exchange regarding allegations of some of their staff having engaged in cheating and misuse of funds from their clients through fictitious schemes. There is no clarity yet and investigations are going on, updated the bank. Now let's talk about SJVN. Government of India announces offer for sale of 4.9% stake in the company. Government of India holds 86.7% stake. According to SEBI rules, no promoter should hold more than 75% in publicly traded company. Even after this 4.9% sale, government will still have 81.7% stake, which they will reduce in coming times to 75%. Share price fell by 13% today because Government of India announced offer for sale, price at 69 rupees per share, which is 15% discount to yesterday's close. In last 6 months, the share price rallied from 30 rupees to 70 levels and has given 130% returns to investors. So this is today's video. Thank you for watching it.